Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 31st of October. I'm Daniel Lam, your host for the podcast. Having worked in research stroke strategy for the last 20 years, I'm very used to seeing the tussle between micro versus macro. So for US equities, on the macro front, has been the continued strong earnings from the companies in the latest earnings season. A number of the most high-profile companies reported last week, particularly in the growth space, and many giving encouraging results. And yet, Nasdaq 100 index is now in correction territory, i.e. pulling back over 10% from its peak in the middle of July this year. A large part of that is due to the challenging macro environment that we're in. Now, if you look at past episodes where there has been domestic economic and policy uncertainties over the last 10 years, you would notice that investors' positioning had been light, and that is almost the prerequisite for any potential equity rebound or rallies that may follow. And judging from the latest fund manager survey, the current positioning in US equities is similar to the light positioning seen in such past episodes. So is this time to go back in the Nasdaq 100 en masse? Not yet, because in the past episodes, it is difficult for growth stocks to have any sustainable rallies if real rates were rising at the same time. And that means the strong momentum in longer-dated yield must abate. Now, for that to happen, we must see two conditions. First of all, a meaningful slowdown in US economic surprise. So therefore, we're back to watching key figures such as this Friday's non-farm payroll. And also a change in the regime, such as the Fed turning more dovish and suggesting a pivot. Now, out of these two, in particular, the change in regime does not seem to be very likely in the near term. So we may get a tactical rebound over the next couple of months due to the low positioning, especially if we do not get any significant worsening from the conflict in the Middle East. But it is quite difficult to see a sustained rally. However, fast money discretionary funds, such as the systematic funds, they have apparently been going back into stocks. So there could be some short-term opportunities here. In such an environment, quality and differentiation between stocks would matter. So investors should most likely need to focus upon the stocks that have delivered good results in outlook and de-emphasize on the ones otherwise. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.